Just give us a sense right now of where you think the South African economy is at, given that we've just made our appearance at the BRICS summit in China, and lots of issues have been raised about whether or not this economy is competitive, it's productive, and whether or not we are pulling the right kind of GDP figures.
Exactly, that's really the key question. I mean, the headline growth numbers for this year are probably going to be pretty good. I think I'm now coming in slightly above consensus, looking for 3.9% for growth this year, and a similar number, slightly higher for next year. But the key thing about those numbers is it's export driven. It's by a sector there that's increasingly competitive in the sense of it shed jobs through the crisis in a bid to become more competitive with a strong currency. But really that sort of hides the underlying story, the sad story, if you like, about South Africa, which is that South Africa's potential growth rate is really only around 3.75%. It could be so much higher with the right policies. It could be closer to 5% or even higher if South Africa had to put in place some of the right policies. And that really is the difference between South Africa and the other BRICS countries, is not so much size of economy, but potential growth rate. Most BRICS economies have a potential growth rate of 5 to 6%, and then obviously you have China on top of that with sort of an 8 to 9% potential growth rate.
All right, what do you make of the current strategies that exist to tackle unemployment in South Africa? We've heard the president unveil a jobs fund valued at 9 billion South African rands. There's also a subsidy for youth employment by companies that take in young students.
Well, I think the key thing about the youth unemployment scheme is that it is basically trying to get people to hire more young people with not necessarily the right skills. They want to train them up in the private sector. That is probably a good scheme overall, but I think it's important to note there that there's a shift in policy away from getting people into universities. It's about getting people into apprenticeship-style training courses, and that's an important move, I think, because at the end of the day, what South Africa does not need is more university graduates. It needs people who are basically blue-collar workers working in construction, infrastructure, in manufacturing, things like that, where they're trained on the job. So that is potentially a good move or a good attempt at policy. But the key thing really, I think, is putting money into the private sector actually going to create jobs, and that's where I'm more sceptical overall. I think the key thing we've seen through this crisis is that South African employers have shed jobs because of a need to increase productivity. They actually had a surplus of labour, I think, during the boom years. They weren't able to get rid of labour then because of the tight labour laws in South Africa. And that's why we saw such a large fall in a number of people unemployed through the crisis relative to the size of the workforce. And those people will not be taken back on board after the crisis. It doesn't mean we have a jobless growth recovery, but it does mean we have a low job growth recovery, and that's really the thing to get a handle on. It means you have to increase the size of the productive economy. You need more businesses, not simply existing businesses taking on more people.
Let's chip away at this in small blocks, Peter, please. We know that during the high growth years, we weren't creating enough jobs, and hence a perpetual and perennial unemployment problem in this country. That situation was then exacerbated by the recession and the global credit crisis, and now we're in a recovery phase, and as companies try to reserve cash and try to be more efficient, they're not hiring. So will any of these schemes help to stimulate employment in this country?
I think they can help in the right circumstances, which we potentially don't quite have at the moment. The trouble is, I think the size of the South African internal economy is not large enough to support the amount of employment that's needed. And at the same time, the current size of the export market is not quite aligned in the correct way. I think what we actually need is a broadening of the sub-Saharan African market, this notion of greater interconnectedness between South Africa and the countries around it. Really, South Africa is a hub of services, of infrastructure, of transportation, that sort of thing, into the rest of sub-Saharan Africa. When you have that, you can have an expansion of the South African economy in order to fulfill that role. And that's really why South Africa is meant to be in BRICS. It's as this sort of hub of Africa, as this voice of Africa. If we can see that, that's when we can start seeing, I think, meaningful amounts of private sector jobs coming along.
Your views on the new growth path that has started to be positioned in many ways as the new macroeconomic strategy for the country, the idea of creating 5 million jobs by the year 2020, predicated on GDP growth of just over 7%, feasible?
Well, I think the 7% growth number isn't really feasible. The 5 million jobs is a more interesting question. If you're talking about private sector jobs, I certainly don't think that is possible at all. I think, as I said, we're going to see a very low job growth recovery, which means although we'll have positive employment growth, we actually won't see the unemployment rate drop that significantly. But I think 5 million jobs can be created. I think they may well be created, but they'll probably come in the public sector. And particularly after the upcoming local elections, we could well see a reinvigoration by the ANC of the need to create employment. And the easiest way to do that will simply be in the public sector by creating these more of these ultra low paid jobs, this sort of scheme we saw come in at the end of last year. And things like that, not really productive jobs in the economy. Right. Obviously, perhaps it's better than no jobs, but it will clearly be a drain on the fiscus.
Let's talk about these public sector jobs, because we know that in general, in terms of the 2011 budget, about 150 billion of the 970 billion is directed at job creation. And people are raising the question, is it really the preserve and the responsibility of the government to be creating jobs? They should just be creating an enabling environment. And the more the government gets involved, the more public spending we see, the more public spending raises the threat of inflation in this country.
Exactly, that's the key dilemma really for the government, and it's about patience at the end of the day. Do you have the patience as a policymaker basically to wait for a long-term payoff by doing this zero-based policy, as I call it now, in terms of setting those foundations of infrastructure, of regulation in the labour market, that sort of stuff, and waiting for them to pay off in dividend terms? Or do you want a fast payoff now? And really it seems that we're more in the latter camp at the moment. And really, I think the government should be spending more money in the short term on infrastructure, on these sort of connectivity ideas into the rest of sub-Saharan Africa, on education, that sort of thing would really be, I think, much more helpful for a longer term payoff. But at the end of the day, it comes down to the political dividends that need to be paid for the ANC.
Let's talk about those political dividends, because some would say a tripartite alliance is what sustains the ANC's leadership and rule in this country. They've got to please Labour as a major constituency. Labour is not concerned about things like inflation targeting and inflation management. They encourage the idea of state-led growth and greater state intervention, irrespective of what business may be arguing by way of fiscal prudence and managing a deficit. So weighing up all those constituencies is what the president and the government has to do, and ultimately service the people. What's going to pay off for South Africa and what's not?
Exactly. I think the key thing about the unions in South Africa is they're actually quite unusual. I mean, when I compared them to the unions in Eastern Europe, as an example, they are much more concerned about labour in the broadest sense in terms of the unemployed as well as the employed. In South Africa, that's not the case. The labour unions in South Africa are willing to accept basically wage settlements that are higher than the market clearing rate, and that causes an unemployment problem. Not the whole unemployment problem, but it is an important marginal contributor to that. But that is the political reality with which South Africa lives in at the end of the day. And hence you see documents coming out like the New Growth Path, which try and basically give a tidbit to each one of these different constituencies. And it's why the New Growth Plan actually reads in a very odd way. In some parts it's very credible, the bits that the Treasury are involved in. In other bits it's much more controversial, such as the economy-wide wage caps, which is obviously a clear pandering to the left there, albeit that probably won't come in place.
Just a final question to you, Peter. I mean, as we have ideological battles about which is the best way to manage this economy, some would say, take a look at China, take a look at India. Those are models of state-led growth, heavy state intervention in directing investments, utilizing state investment banks, development finance institutions. Why should South Africa not do the same if ultimately it deals with legacy issues and social problems? Why would that be problematic? Why are we arguing that the government needs to be more cautious, more reserved in how it uses public funds?
I think that that's an interesting debate really to have, and it's a question of direction. On the one hand, South Africa is moving back towards greater state involvement, and we've seen that around the nationalisation debate, things like that, and also the jobs debate as well. Whereas very much in China, it's true they are coming from very much a state-led economic policy, but the fact is they're moving away from that towards a more open capitalist system, and it's that move which is creating the consumption, which is creating the investment in the economy, really. And obviously, yes, there's a lot of infrastructure going on in China, that sort of thing, which is a very important contributor to growth. But I would suggest it's actually the move away from the state system towards the capitalist system there, which is really causing the growth and the excitement in the economy there. And that's probably the lesson for South Africa as well.